Well, welcome everyone. My name is Wesley from Business Blessings, and welcome to our budget webinar for 2026. We didn't do one of these guys last year because we didn't think there was anything to talk about, but I guess there's plenty to talk about today. Just before we start, I do need to read a disclaimer. So that the information presented today's webinar is general in nature and has been prepared without taking into account your personal objectives, financial situations, or individual needs. Nothing discussed today should be considered financial, tax, or legal advice. We strongly recommend that before making any financial decisions based on what you hear today, you seek independent advice from a qualified professional who can assess your specific circumstances. The views expressed by our panelists are their own and do not constitute a recommendation to buy, sell, or hold any financial product. With that said, we hope today's session will be very valuable, have valuable insights and a clear picture of what the 2026 federal budget means for you, and we encourage you to reach out to a qualified advisor to discuss how it applies to your personal situation. And we do have two of those on the call today, so you may even want to reach out to them. So let's get started. Alec Robertson, do you want to introduce yourself so people know who you are?
Yes. Yeah, no worries. I'm Alec Robertson, so I'm a partner at Marsh Ticknell Chartered Accountants. So we look after small to medium-sized businesses, help them minimise tax, generate wealth, and grow their businesses as well. And the Labor government's proposing to try and make that a little bit harder, but we'll work with whatever rules that they come up with and help our clients the best we can.
Sounds great. And full disclosure, Alec is my accountant as well. So just so you know that as well. Dr. Rodson Hill, do you want to introduce yourself?
Well, thank you, Wes. I'm Rodson Hill. I combine a few interests. I am an ordained minister with Australian Christian churches. I pastor a church here on the Gold Coast. I'm also an economist, and I've been teaching and following economic matters now for 45 years. I'm a company director as well in the not-for-profit sector.
That's good. And the other one we got on is Alex Cook. Alex,
G'day.
Welcome.
G'day, Wes. Yes, thank you. So I'm Alex Cook. I'm a financial planner, have been for, must be around 20 odd years these days, for a company called Livingston Wealth Management, which is my small boutique financial planning practice. But also my other passion is stewardship ministry. So I also lead an organisation called Wealth with Purpose, which is about teaching people what the Bible says about money. And so that's my great passion. And great to be here with you.
It's good. It's good to have each one of you. And welcome to the attendees that are on. So please feel free to use the chat to answer questions, to ask questions. You're here to ask questions. So for those who put the pre-questions in, I do have them on the agenda, and some of them are going to be covered as we go anyway. But if there is a specific question, if you would like to put that in the chat, and then I'll pick it up and ask at the appropriate time. Well, let's start. Overall, good, bad, indifferent, thumbs up, thumbs down. Anyone want to be brave enough? Thumbs down.
Yeah, I think I'll draw the thumbs down.
Look, I thought it was terrible, to be honest. I don't think this is a budget that's going to take Australia into a prosperous place. It's just more taxes, more taking from people that are trying to get ahead and be productive, whether they're business owners, especially business owners. And people who are trying to get ahead through wealth creation, and now they're going to get harder with capital gains and all sorts of things. So I can't see how this is going to be great for Australian society long term.
I thought it was a bad budget.
That's my overall.
I thought it was a bad budget. I think it, they're definitely introduced more taxes. They might have, sneaky ways of trying to dress it up. But that's sort of what it is. So, discouraging people that are building wealth. They've sort of definitely tried to come up with ways to make that trickier. And they'll talk about rollover relief and how you can change your structures. But then we'll have the state governments having their hand out for stamp duty if you look to try and restructure people. So, it's a bit disappointing hearing some of the things that they had, and I don't think it's going to do much to improve the country, unfortunately.
No, look, I concur. I think it's a very cynical budget. It shifts the baddies in the economy from the rich to the old, and I think it does nothing at all to tackle inflation. We won't see interest rates come down, and quite frankly, any hope that young people might have of finding it easier to get into the housing market, I just don't think that's going to materialise, because the biggest problems young people will face will be an increasing tax burden through bracket creep, and at least for the next couple of years, much higher interest rates on mortgages. So I just don't think the government has done the fundamental saving that it needs to do. We need to shrink the size of government. We need to shrink the size of the deficit. We need to shrink the size of the national debt. And the worst thing that we can do for intergenerational equity is to increase our national debt, which we are doing.
Mm. And on that, Rod, just on the housing for young people, if you look at the immigration figures that were built into the budget, they're still very elevated. So young people are competing against all these new people coming to the country, so their rents aren't going to come down. And unless your rents come down, it gets very hard to save for a deposit. And so I don't see how young people are going to be better off at all. So,
well, believe it or not, Treasury is actually forecasting a small increase in the average rent. It only amounts to a couple of $100 a year, but rents are not going to go in the right direction. And the Treasury forecast for the reduction in the cost of new homes it's about 2%. And that's going to disappear, as I said, through higher rates of interest on our mortgages. And many young people who are increasing their earning capacity are going to find themselves moving into a higher tax bracket. So I'm very doubtful that young people are going to be any better off.
Yeah, well, with inflationary pressures, those particularly with mortgages already, I mean, how many young people got sucked in late last year with all the first homeowner schemes? There was a 40% increase in first home own loan applications, I think in October when the scheme started. So you had all these people coming in with 95% LVRs.
Yes.
And now rates are rising. They're going to get cleaned out, particularly if we go into recession and unemployment ticks up and interest rates keep going up because of inflation. I think young people are not going to benefit in the slightest, especially not young families.
And so we're kind of talking about the higher end, but even at the lower end, there's no changes to unemployment benefits or those kind of things. I mean, they're changing, helping people who are unemployed get jobs and things the way that's being done. But it doesn't. So even those that are on the lower incomes, I don't think this is helping at all, is it?
Oh, there's minor relief on wages through the $250 tax handback on so-called earned income, minor adjustments to the lowest tax rate, but really there's not very much in there for people at the lower end, no.
Rod, I sneeze and I spend $250 these days.
Of course.
That'd be a cheap day at Woolies and Coles, wouldn't
it? Yeah, that's what I'm thinking too. Okay, guys, well, let's start to go through the different areas. Let's start with capital gains tax. So what's the go here? Who wants to tackle that? Alec, are you a good one to?
Yeah, no, I can.
You're a good accountant.
That's right. So we have you hold something for more than 12 months, we get a 50% discount on capital gains tax. So effectively from 1 July 27, that's going to be scrapped. And even the pre-CGT assets, even the pre-85 assets are now going to start to get caught as well. So I'm expecting around June 27, there's going to be lots of valuations on people's property and business and shares and anything else they own to try and get a new cost base before the new rules kick in. Because we're going to move to something which is called an indexation model, which was in back in the 90s. So it's a long time ago now.
See, it's interesting that they've done the pre-1985, which is when CGT first came in. That would be a lot of assets, wouldn't it, around Australia?
Well, they must be thinking it's not that many. So that's probably why they're doing it. Because, you're going back to assets that have been held for more than 40 years. So they must have done their polling behind the scenes and figured it's not going to be a big impact.
Possibly. I do believe it is going to affect farmers, though. And there was an ironclad guarantee given to farmers back then when CGT was first introduced that those pre-85 assets wouldn't be ever included. And it looks as if they're going to be caught up in this new regime. So that's going to make things pretty difficult.
So what about baby boomers who started their businesses 40, 50 years ago, now coming to retire? They're going to get caught up in them, aren't they?
Correct.
I believe so.
Some of them might be okay if you're in business, if it's active assets, because there might be small business concessions that you can get out on. Yeah. But if you're not able to if you don't qualify for those small business concessions, then yes, it's going to be an increase in capital gains tax.
So what's going to be the new strategy now? Is this just going to be, this is it? We've just got to live with it? Is there, because like if you buy in your superannuation fund or a corporation, but they're still going to have CGT.
Well, I think super's just got a lot more attractive in that sense compared to some of these other vehicles. Because I don't think the capital gains tax, I think, doesn't change inside superannuation. It's just in what partnerships, your own name, and trusts, I think, isn't it, Alex?
Right.
So, yeah.
Because the company wasn't applicable for companies anyway.
Yeah. So I think super funds, in one sense, and largely were untouched overnight, actually became more attractive in that respect as a vehicle for wealth creation, so long as you don't have too much, because once you have too much, you're going to get hit. Once they deem you to have too much, which would be $3 million, then they'll come after you.
But 3 million is not a lot when you're talking property these days.
No, and the risk is that might change over time too. That's the worry for some people is, what do people say is an okay amount to put into super? So what stage is the government going to say, oh no, you've got too much money, we want to tax you?
Yeah, the real issue we're dealing with, I think, we've got a government that does not want to reduce its spending. So they've only got one option, and that is to find more tax revenue. And they probably can't tax us much more on our income because that will create a huge disincentive for productive enterprise. So now they're tackling wealth. They got their fingers burned when they tried to raid superannuation a couple of years ago. But I suspect that if superannuation suddenly becomes more popular as a vehicle for parking wealth, that they'll come after that as well. So
they will, because I look at it. I think you're right, Rod. Yeah. They will. Yeah.
But
I say, sorry, go on.
What's especially egregious to me is that they were adamant before the last election that this wouldn't happen. And, I think there's a serious integrity issue here. And it's got to the point where it is impossible to trust what the politicians say. And this is not just a Labor problem. It really goes back well over 30 years now. There have been significant occasions. I mean, some people might remember John Howard distinguishing between core and non-core election promises, So I think the standing of politicians within our community has deteriorated, and it's got to the point now where we simply cannot trust anything they say.
So, Rod, the problem with that is we can't plan.
No, we can't. Long-term planning is almost impossible.
Yeah.
It's also why I think One Nation's taking off as well. I mean, that reflects the fact that it doesn't matter, I think, what the Liberal Party say anymore. I don't think anyone's going to believe them. Angus Taylor could come out with a response, and the moment he gets elected, he might say, oh, we'll bring immigration down. Then the moment he gets elected, he says, oh, the economy can't afford it. And then they'll leave it high. I mean, it can't trust a word they say, and that's why I think One Nation will continue. It'll be interesting to see what happens in the when we go to a federal election as opposed to just a single seat. See what actually happens. The start of a new political earthquake, as they've been calling it.
Yes. Okay, so getting back to CGT, practical things. Alec, you said that come the end of next financial year, we're going to have to get everything revalued if we are going to end up having to pay capital gains tax on it. Is there any other practical things that at this stage we know we're going to need to do?
Well, part of it will be reviewing your structure. So the trick at the moment is you don't want to just race out and change your structure. Anything new you're doing, you should consider, like get accounting and legal advice and consider what you're going to do going forward. But between now and 1 July 27, it will be, hey, once this is legislation, and the only reason I say wait is because super we had unrealised gains, but then that ended up being taken off the table. So if people had gone and made decisions early, then they'd have gone, whoops, what did we do that for? And so we'll just have to see if this gets through the way it is. But if it does, then that's when people are going to need to look at, hey, do they still want to have stuff in discretionary trusts, or do they want to move to a company structure or a unit trust structure? And then also looking what to do with their assets going forward. So, liaising with financial planner and your accountant and just talking about, hey, what is your wealth strategy going forward? Because this will have an impact on what you're going to do.
Okay, so let's move forward then and talk about negative gearing. So it's gone as of last night, is that right? From existing structures, but it's still available on new builds. Am I
If
correct?
you've already got it, you're okay until 1 July 27.
Yeah.
But if you haven't had if your deal hasn't gone through, then if you're planning on buying something next week, then unless it's a new property, then you're going to have it that from 1 July, you're going to have it that you're not going to be entitled to the negative gearing.
Yeah. So,
Alex, I'd be interested in your perspective on negative gearing, because I've never actually been a huge fan in the sense that it's subsidising other people's losses. But to me, what it's done from a societal point of view is it's turned housing into a speculative asset class. And I think it's benefit the baby boomers beautifully, but it's locked out a lot of young people. I mean, house prices are really obscene in most major cities. What do you think will be the impact on that potentially?
Yeah, I suppose there's two parts to it, and I'll probably get Rod to talk about the economics of it. I think that just the challenge with this one is that people have made decisions assuming that negative gearing wasn't going to be touched. So, you've had people buy a lot of property in the last 12 months, and then suddenly, things are potentially going to then start to change going forward for them. So that's I think that's the disappointing thing of it. Ideally, they should have done what Bill Shorten did and went to the election and said, this is what we're doing. But I'd say they had advice not to do that. And so I did hear someone say it's better to ask for forgiveness than ask for permission. But then that comes back to the integrity thing that Rod was talking about.
Yeah.
So hang on a minute, Ali. Are you saying that old properties now that you're using negative gearing are not grandfathered in?
They will be, but anything new won't be, yeah.
Yeah. So if I went out and bought another property tomorrow, which is an old existing property, then I'm not going to be able to get negative gearing on, but the properties I've already got, I'm going to be okay on.
If you've got an unconditional contract and it's settling tomorrow, you're out.
Yeah. So people who bought like a month ago would be settling tomorrow.
Yeah. And they've done their numbers based on negative gearing, based on what they're saying here.
They could be done like a dinner.
Correct, but they'll still have to settle because they've got their contract that's unconditional. Yeah.
Ouch, that's going to hurt a lot. That's going to be very painful. Very painful indeed.
It's not really very fair for those people. Yeah.
It's not, no, it's not.
But
Rod,
it's not law, so they might change that. So
yeah. uh, Rod, I think Alec put a challenge to you about what the economics of this.
Economic impact of
Well,
it is, yeah.
the principle of negative gearing is a good one, and that is that if you make a loss in one area, you could write that off against income from other areas. And I think that's got a lot of um, positive for businesses. And this whole idea of negatively gearing property, I mean, it's a bit silly, really, to deliberately make a loss
Mm.
on anything, really. Um, the problem, I think, the fundamental problem actually is our progressive income tax system, because a lot of the motivation for managing our tax affairs arises because some people are paying a 47% marginal tax rate and others are not. And that's really much of the rationale for discretionary trusts, like most family trusts, although some of them are there to help manage assets. But a lot of our planning is focused on the issue of minimising the tax rate that we pay on income. And although I think negative gearing, it's a positive thing economically in general because it helps reduce the impact of risk in new enterprise of any kind. Um, but much of what's happening or what's been happening in the property market is driven by people who are trying to deal with a progressive tax system. And I think if the Treasurer was a reforming Treasurer, truly a reforming Treasurer, he would have looked very, very carefully at the way in which we actually structure our income tax system.
Yeah. And no doubt we're going to talk about that a bit more later on. But you're right. Like he was, he was saying that it's his forget the terms he was using, but it's I don't think he went far enough in the reform. Like if you're going to reform properly. It seems like he's still tinkering around the edges and stuff.
Well, it's
Yeah,
potentially going to
I
encourage
wouldn't call it
people to hang
reform.
on to those properties.
Yeah.
Mm.
So they're not going to sell them because
Well,
they
that would be the recommendation, wouldn't it?
yes. Um, but I guess too, you do find that over time, what is negatively geared at the start tends to go into positive
Once you've
territory.
paid your loan off,
Yeah.
once
Yeah.
you've paid the
Yeah.
loan off, yeah, that's right. But I think one of the other implications is that there will probably be people will probably invest more in the family home
Yeah.
because that's still a tax-free area. But you know what? We've heard talk on the Labor side of politics that it's nearly time we started taxing the family home. So you've got to be so careful. All I would say is don't do anything knee jerk. Don't make any rash decisions right now, but
Mm.
seek the very best advice that you can possibly afford. That's what I would say.
Mm.
And don't ask an economist, right?
Yeah. But do you think, like, actually in the projections, it doesn't look like they're actually projecting there's going to be a huge rise in new builds happening. But do you think, like, once this gets through, that we will actually see new builds, which is going towards tackling the supply issue, which is our major problem at the moment?
Well, there is some incentive in there for state governments to free up land because they'll withhold some funding if they don't do that. So the states do anything for money. So we might see some relaxation on things like land zoning and might be easier to build a granny flat and those kinds of things. But one of the biggest issues we've got, of course, is lack of tradies. Nothing's happening in the budget to address that. So there
Building
might
costs are
be,
going through the roof as well.
absolutely, there might be willing purchasers, but will there be supply?
Mm.
Yeah.
I actually think we have a demand problem driven by immigration. I think you've got to slash immigration. There's just too many people coming in chasing too few assets. And that's, I don't think either side of the politics, maybe One Nation, but not the two major parties, I don't think want to cut it.
No, and I think one of the reasons is they know that in order to cut immigration substantially, they're going to have to reduce the number of student visas they issue. And they tried that once already. And they just, one reason is there's now such a large private education sector that to do so would send a whole lot of businesses to the wall. So it's going to be a really tough call to make.
So, Rod, they did make some changes in that education institutions need to be building more of their own housing, and we're seeing, like watching QUT build across the road here, and
Yes, yeah.
if you go to UQ, there's a heck of a lot of residential stuff being built to kind of counteract that as well. Was there anything about foreign investors buying property here too? Because
there's an extension of the ban on foreign ownership of domestic dwellings. I can't remember how long that was extended, but it has been extended.
Yeah, the June 29. So they've pushed that out for a few more years.
So, Alec, this may be a question for you. Does this mean that we are going to have to move to buying, like if you wanted to buy property that is negatively geared, that you're going to need to buy it in some kind of structure?
I think that what will happen is that people will look to buy the new assets, or they might look at other ways of investing into property. So potentially the unit trust may become more popular.
Yeah. But stay tuned and watch what happens, hey, I guess.
Correct.
What about superannuation funds buying negatively geared property in super funds? But then that's going to, like, I know you've got the two sides. Like at the moment, we've got property going through the roof, so we're building equity. But if your superannuation fund is having to cover the cost of a negatively geared property, that's going to decrease the amount in your fund as well, isn't it? Like, is there?
Yeah, and there's rules around how much you can borrow in a super fund as well. So you can only.
It's higher cost of funds and all sorts of limitations.
Yeah.
So I think the super fund trustee would have to be careful about putting a negatively geared property in there. So normally the borrowings are capped at 70%. So I think super funds can be used for property investments, but not necessarily for negatively geared property.
Yeah. And so because they're the lower LVR, like only the amount you can borrow would mean that the interest payments are going to be lower anyway, so it's probably not going to be negatively geared.
Correct.
Okay, well, let's move on to a huge area, taxing trusts. Good grief. What are we going to do?
Shorten, the ghost of Bill Shorten.
It's haunting me. I wonder if he's smiling wherever he is now. Yes.
He'll be going, this is the way you do it. So trusts are going to have to pay 30% tax. And then when they make distributions, some beneficiaries will get that as a non-refundable tax credit. But if it's a company, then the company won't get a tax credit. So effectively that means that if a trust distributes to a company, it's going to be double taxed. So discretionary trust, the trust will pay 30%, and then the company will either pay 25 or 30%. So effectively the tax rate to the corporate beneficiary is going to be between 55 and 60%. So if that goes through as law, you sort of put a line through distributing monies from a discretionary trust to a company. So the tax cost would discourage people from doing that. In terms of individuals, people will still be able to distribute to individuals. They'll need to be careful about some of those lower income individuals because some of that 30%, since it's a non-refundable tax credit, they may not actually get that money back. They might only get part of it back. And then the other thing's going to be, we'll have to wait for the detail, but non-for-profits that aren't charities, then potentially distributions from trusts to non-for-profits might be that the 30% is payable by the discretionary trust, but then the non-for-profit can't get their hands on it.
And there's I do want to address that because when we have a number of believers on here who use their trust to, say, distribute to their church, the church is not uh, they're tax exempt, but they may not have tax deductibility of donations. So is that going to cut that out totally? Is that what we're going to see?
Potentially, we'll have to wait to see what the final, what the final detail is. So, and that may not be, that may be intended or not intended by this proposal. So we'll just have to see how that plays out. But it's definitely going to be an opportunity for the non-for-profit centre to lobby the government. Whether they do that through the Australian Christian Lobby or through other channels, but there's definitely an opportunity there to do that and say, hang on a minute, you're making this harder for us.
So, and I know this is probably could be too early to tell, is the benefit of having a trust just gone?
I don't think it's gone, but it's not as advantageous as it was previously. So
it's a tax grab.
I think
that
probably what you'll see is more businesses will now be in companies and you'll have a trust as a shareholder. But then the corporate using a bucket company, that's the thing that's likely to disappear. So you might see people set up in a company with, say, a holding company and invest out of a holding company rather than letting a trust distribute to a bucket company and reinvesting that way. So I just think it's going to change how people do things in terms of how they set up their structures.
So, Alex, some people know what a bucket company is, others don't. Can you briefly explain what a bucket company is?
Yeah, sure. So what it is it's effectively what you do is you have a trust distribute to a company that pays tax at either 25 or 30%, and then it takes what's left over, either 75 or 70%, and then reinvest that into other assets. And so effectively what the government's doing here now is saying, hey, that entity will effectively pay 55 or 60% tax, which then means you'll only be left with, say, 35 or 40%. So then what you do instead of that is you would have a holding company between your trading company and your trust, so that you're still only paying 30% tax and then reinvest out of that. ATO doesn't like discretionary trusts, so it will start to move more and more people down the company structure.
So it sounds like you've already got a workaround of this, or thinking about it.
So you got to see if this ends up law, but that's a potential way. And the other thing is to use unit trusts instead of discretionary unit trusts for property or things that you're wanting to have in that sort of style of structure.
So there's hundreds of thousands, aren't there, of small businesses or medium-sized businesses that are using family trusts as their corporate structure. Are they all going to need to get some advice now as to what to do?
At some stage they will. So, I think they need to chat to their accountant. The challenge you got is this isn't law and you don't know what the rollover relief provisions are going to be. Like trusts can roll into company structures without paying capital gains tax. But the challenge you've got in Queensland is you've got stamp duty. So the state government normally puts their hand out for stamp duty. So I didn't hear any announcement of, hey, we've been working with state governments and we're gonna give you rollover relief on stamp duty.
No, I didn't hear that either.
There's nearly 900,000 family trusts.
900,000.
900,000. I think it's about 898 or something. There's a lot of them. Yeah.
So are they wanting to eliminate most of those? It sounds like.
Well, I think the ATO for a while has been anti-discretionary trusts. And I'd say someone managed to convince Treasury that now's the time to make a move.
I'm surprised that the wealthier Australians haven't got in somebody's ear. Maybe that's still yet to come.
Well, as these guys have been saying, there's a lot of changes that have to be legislated. So it will be very interesting to see what happens in the Senate at the time.
Yeah.
Maybe we should chat to Anthony Albanese and a few others and find out how they're structured.
Where's somebody asked Albo today how many has he used negative gearing structures in the past, and he had to admit he had, but he doesn't now.
Well, he
So
probably doesn't need to because he's still on the old defined benefit scheme for
Yeah.
politicians. So he's going to get off scot-free, personally.
With a massive pension.
Yeah.
Yeah.
So next we'll hear is he's announcing his resignation. Is that what you're telling me? Get out while the going's good. Okay. I shouldn't go there. Okay, let's anything else about trusts? So it sounds like it's a wait and see what happens and what gets legislated. It's not to come in for next financial year anyway, is it? We've got 2 years.
Yeah, you're talking July 28th. So, like in the meantime, if you got a bucket company, you put as much money into it in the next couple of years as you can, 2 or 3 years,
Yeah.
because you still got 3 financial years.
Yeah.
But then just be prepared that after that you will need to look at using something else.
And a lot of companies do use a bucket company structure, a lot of trusts. Yeah.
Once people are, as Rod said, people don't like paying the top tax rate. So
Yeah.
the bucket companies become very attractive when you're paying 47% tax. If you can reduce that to 25% or 30%.
Yeah, that's good. Okay, anything else on trusts that we should cover?
Nothing else for me.
Okay, let's talk about business. So there's a couple of good things here. I think they're good. Hopefully they're good. So instant tax write-offs is now permanent. Is that what we're hearing for 20,000?
Correct.
Yeah.
If your turnover is less than $10 million. Yeah.
Yeah.
So that's great. Big tick. I think it makes it easier for everybody. We don't have to keep these depreciation schedules for little assets. So.
Is it just a one asset of 20,000, or can you buy as many assets under 20,000 as you like?
Depends on what you're sort of doing.
So you can't buy half a ute for your business.
No, you can't.
Right.
I'll have the wheels today, the tray tomorrow.
and gone are the days of the $20,000 ute. Remember when that concession was first brought in, you could actually buy a ute for $20,000, but you can't anymore.
No, you can't. You got to get a very cheap second-hand one. But like if you were to say buy a business and it's got those individual assets within those business are less than 20,000, then you'd be able to pick those up under the instant asset write-off. So.
Mm-hmm.
So it's probably not going to increase investment overall by very much, but it will make things a little bit easier for small businesses.
And I think it's a good thing that came in as a result of COVID, and it's good that it's staying. Yeah. So.
Yeah, absolutely. The other thing, while we're giving the government tips, there are a lot of small moves which they say and probably will reduce compliance costs with federal regulations. They're claiming that ultimately it's about 10 billion. The current estimate for the cost of compliance, this is for companies, to federal regulations, about $160 billion a year. So that actually comes off the bottom line of companies. It's built into their prices and so on. So anything a government does to reduce the costs of compliance is a good thing, but we've got to go a lot further than saving $10 billion in compliance.
It's a drop.
And they're trying to do that with the individual returns, like the $1,000 standard deduction. Like that's definitely something that they're trying to do to cut down some compliance costs. So.
Okay, other things for business, the tax loss carryback, is that what it's called?
That is, yes, loss carryback. Yep, that's it.
So we're going to have to get used to all these new terms, aren't we?
Correct. This one has been around before, so when they brought this back, but how this one works is if you have a really good year, but then you have a couple of bad years where you have some losses, those losses you can offset them against profits. from the previous years. And what that means is some of the tax that you've paid, you can then get some of that refunded. So that comes in again from July 26. So that'll be for the next financial year.
But it's limited to I thought it was a strange thing, to the amount of fringe benefits tax and amount of PAYG that you pay.
There's a
There's
loss
two things.
carryback, so that's anyone less than $1 billion in turnover. There's then a loss refundability for small startups.
Loss refundability. Okay. Yeah,
So this is new. This hasn't been
yeah.
around before. So for the
Okay.
FY29 year, we're going to go a bit further ahead.
Yes.
Startup companies with turnover less than $10 million, if they generate a tax loss in their first 2 years, they can get a refundable tax offset on that loss up to the amount of FBT they've paid or PAYG on wages that they've paid. So that is new. So that's definitely going to be one to watch for new startups from FY29.
So we did have someone had a question about new startups, what's available for them. So that's a good thing. But that's obviously for not for like it's for companies that would only benefit if they're employing staff and they're getting quite a bit of PAYG being paid and stuff as well. And I guess it depends on how much the loss is going to be as well.
Correct, that's right. But it's a way to try and help people to getting up and going in business. And I think we're going to see more people in company structures than trust structures. So
yes, but I think one of the things they're saying is that we're not seeing enough business startups happening in Australia, that it's on the decline at the moment. Are you picking up anything around that, Rod?
I haven't seen that data, but I don't think this budget is making it easier for startups. I think it's increasing risk, partly because of the way in which the capital gains tax will work. And we must remember that we're actually competing internationally now. And so there will be young entrepreneurs who will consider starting a business in a different jurisdiction altogether.
Yeah. Which is what's been happening for a long time.
It has, but it'll get worse. It'll get worse.
I was talking to a tech startup guy the other day. He said he's losing so many of his staff to overseas. It's not funny.
Well, look, I mean, if the way forward is, with tech companies, for example, they're what we economists call footloose. They can establish anywhere they like.
Yeah.
They don't have to be established in Australia. So I think that there's a few inconsistencies in the way in which the government's approaching this thing. And I think many young entrepreneurs who are interested in a tech startup, they will be looking at which jurisdiction is the best one for theirs now.
Alex Cook, were you going to say something? Did I cut you off before?
No, I mean, I'm saying exactly what Rod's saying. I just think it's going to increase. I think you'll see there's a risk of a brain drain over time that's happened from a lot of societies, where people go to where capital is treated better. I think that's the trend.
Yeah.
People will go where capital's looked after, where it's not attacked all the time. This is, I think, that's the thing. The problem with this budget, I think, is ideological. It's not just that policies themselves aren't good, it's ideological. And that, to me, is the long-term problem here, not just, all these things that we're talking about. It's a long-term ideological issue. And that, to me, is a much harder problem to solve.
And guys, we've done a few of these and we still keep talking about the same things because it hasn't been fixed. There was a specific question, and I don't know whether anyone can answer this. Interested to know how the budget might affect income from monetized content on YouTube and TikTok, and right it might be taxed at.
In theory, it shouldn't change. Yeah. So
yes, that's what I thought.
If they're making a lot of money and they're in a trust structure and they're using a corporate trustee, then there's going to be some impact there. So, but in terms of where their money's coming from, the budget hasn't changed anything in terms of that.
No, that's good. Okay, let's look at. The other one is R&D credit. So research and development credit's gone up, hasn't it?
I'm not really sure what they're doing. I'm reading that and it's very confusing. So it'll be interesting to see what they do. So
Okay.
if you spend more than 20,000 on R&D, you could normally lodge an R&D claim. But now they're talking about that there's got to be some review done with a registered research service provider. So I think we're just going to have to watch the space a bit more. Just be aware from FY29 that yes, there's going to be potential for an increase in the offset, but there's also going to be some changes to the rules. So.
Yeah. Good.
But there's a lot of water to go under the bridge between now and then.
Okay, we're saying you're on a bit of time. We've got about 15 minutes to go. If anyone's got any questions that they want to put in the chat, please do so. Tax cuts, like mum and dad tax cuts or individuals.
Yes, we get a tax cut from 1 July. Marginal tax rate.
That's already built in, isn't it? Is it from?
One's from years ago, yeah.
Yeah.
Yes.
But I think there's another one coming, isn't it, for 27 down to 14%. Not sure if that one was already there, but
yeah. Well, you got FY27 where the 16% rate drops to 15, and then FY28 going down to 14, and then the other changes are these offsets. So there's the $250 offset, and then the $1,000 standard deduction for work-related expenses. So they're the two changes, but we're the offset doesn't come in until FY28. The instant deduction is going to come in from next financial year.
So does that mean that everyone's just going to get $1,000 who are working?
Well, it's a deduction, so don't expect $1,000 in the bank account.
No. Oh, shucks.
It's your marginal tax rate on your $1,000.
So you could end up with $470 or could end up with $160 or something.
You might get your 250 on top of that if it's earned through wages, but honestly, it's not going to offset the effects of inflation over the next few years, that's for sure.
Oh.
And I think the logic behind that is so people don't have to, muck around trying to drag in their little receipts for things there. So try
that does make a lot of sense.
Your laundry, your uniform allowance or something like that. Yeah,
so that's about them trying to make getting the personalized tax returns done much easier.
Correct.
It? Yeah. Anything else to say about tax cuts?
The only thing with it is that from a point of view of people who are salary sacrificing things like that into super, it's not worth doing below 45 grand if you've got 45 grand worth of income, because it's going to be equal at 15% from 18 to 45,000, and then the year after it drops to 14%. So if you want to put extra contributions into super and claim as a deduction or salary sacrifice, it's only going to be worth it if your income's above 45. Otherwise, it's a waste of time. I mean, it's already marginal now at 16%, but it'll be even more pointless.
And there's also a risk with this because if you've got FP, like previously, you could get exempt from FBT because otherwise deductible. But if someone decides to claim this $1,000 deduction in their tax return, then potentially some of the salary sacrifice that's happening, they might actually put that at risk. So, because if you've claimed $1,000 in your tax return, then you're turning around and trying to salary sacrifice a laptop or something else. Are you then undoing all that FBT? So we'll have to watch this from a salary sacrificing perspective to make sure that people can still get their salary sacrifice exemptions. It might be they're better to just stay with doing their salary sacrifice and not try and claim this deduction. You can still claim the old way.
Sounds like we're going to get a very detailed tax ruling.
I think more work needs to be done in this space. Yeah.
Yes.
They've done a nice sales pitch, but there's a bit more to this one.
Yeah.
We've even got you thinking you're getting $1,000 worth.
Hey, no. Well,
right,
I know. I must admit, I was listening to Jim Chalmers last night when he did his budget speech, and I thought, this is very high level. There's not a lot of detail here, mate. And it's not until you dig down deeper and you find out the stuff. Yeah. So talking about a sales pitch, I think that's what he was trying to do last night.
Yeah. Now, we joked about it this morning. We joked a lot of clients are going to be wanting to know where their $1,000 is. Yeah.
Okay, we're sorry so it's not going to be like it's not going to be like a rebate. Like when during COVID, didn't we get $1,000 something rebate back, and we actually got that money, didn't we?
Yeah, we did. Yeah.
Yes. So it's
Yeah,
not
no, it
like
won't be like that. It'll be a deduction in your tax return. Yeah, but you're going to have to decide whether you should claim that or not,
yeah.
depending on your individual circumstances.
Okay. Oh, dearie me. So, Alec, you tax accountants are going to be earning a lot more money. I think this is the outcome.
Gonna be busy, yeah.
Yeah.
It's a good budget for you,
I
Alex.
think financial
Good budget,
planners
Alex.
will be too. That's
Yeah.
right. You know that plan we did last year? Let's do another one.
Yeah. I charged you 5,000, then I now need to charge you 10,000 because there's extra. Yeah. No, is that the way it works? No.
Well, one of the problems is that people are not going to financial planners.
You're not.
I think one of the changes that came out of the Royal Commission into the financial services industry because they've changed the remuneration structure for financial advisors, and a lot of people just don't want to pay the upfront costs. So I think a lot of people who need advice are just not going to get it.
That's very true. And not only that, there's half the number of advisors now. So courtesy of all the compliance and regulation, we've gone from 30,000 planners down to less than 15. So it's a massive crisis. And also, therefore, as a result, planners are putting up their fees because of A, the compliance, and B, there's less of them. So, as you say, the guy that needs advice is less likely to get it.
Yeah, and the next thing is, even if that person's willing to pay, some financial planners don't want to take them on because they know there's not much.
They don't.
There's not much
Not enough in it.
upside from their side of things. Yeah, so
Yeah.
there's only a certain group of people in the financial planning space that are happy to look after clients that may not actually generate them much in the way of fees.
Most financial planners don't want to do ad hoc work.
Mm.
They just want to do ongoing. Just don't have the time. That's the main issue that they face now. Not also the risk for ad hoc work doesn't make sense. The risk doesn't stack up. So it's a real problem.
Mm. It is something we see as well. Yeah.
Okay, guys. So for those that are on, if there's any questions, if you want to put them through. I think I've come to the end of my specific questions I have for you guys. Any other general comments that you want to make? Something that you've been trying to get off your chest, haven't had a chance to yet.
Might be just worth making a comment on the so-called savings that the Treasurer has touted. Of course, they're not really savings at all, because in net terms, the government is going to spend more and the budget deficit is going to grow. But of the so-called savings of some $68 billion in the forward estimates, 56% of that is coming from so-called savings in the NDIS. And there's going to be a big fight over that, of course, because the NDIS has become so entrenched, really, within the economy. They're looking at moving people out of the NDIS and into other schemes. But one of the problems of the NDIS, of course, is that the states have pulled back funding of alternative schemes and they don't want to refund them. So it's going to be very, very difficult, I think, for the federal government to cut the NDIS. They have to get growth down. There's no doubt about that. The whole scheme wasn't all that well thought out in the first place. In particular, it's allowed state governments to shirk their responsibilities in other areas. So I think the savings, the forward estimates, I think are a lot of wishful thinking.
Yep.
And to get back to Alex's point, if you just look at what's been happening over the last few decades, Australia has just been sliding into more and more socialism. Governments are getting bigger and bigger. They have more control over the decisions that we make. And there doesn't seem to be the political will to pull back from that at all.
I just think it's a wake-up call for the conservative side of politics. Instead of fighting with each other, unite, agree some high-level strategies. Hey, where do we want this country to be in 10 or 20 years' time? And start to agree on some of these basic fundamentals where they've got a lot of alignment on, and get out there and take that pitch to the people. Otherwise, we're going to be stuck with Labor and the Greens for many years to come, and they're showing their true colours.
The other problem, Rod, is there are so many people, though, now who benefit from the government in some way. They get somehow some government benefit or program, and so they'll keep voting for that.
That's quite possible. And of course, since the 2022 election, over 3/4 of employment growth is in the public service and other government-funded jobs. So the private sector hasn't really been contributing in that sense, although more recent data has shown a bit of life in the private sector, but we're just not getting the private sector growth that we really need to be sustainable into the future.
Yep, 100%.
So what we need is some very good conservative financial think tanks going on. One of my concerns, it's my personal opinion, obviously, is that we're not, Clinton said it's the economy stupid. The Conservatives are actually not looking at the financial aspects as much as the moral aspects. And I know the moral aspects are key, but actually what gets votes is how it's going to hurt your hip pocket, in doing that. But we need to rise up and have some really good, deep thinking about how do we actually fix these structural issues that we've got. Because, that seems to be the theme that's coming through here is we have structural tax issues that need to be solved. Let's get in and solve these and do the hard yards to do it. And be honest in telling the electorate this is why we're doing it, and not slipping it in the back door.
Well, we need political leadership instead of having politicians just follow polls and focus groups.
Yeah, that's right. Yeah, that's good.
Yeah, the vision.
Vision and leadership.
That's right.
Paul Keating had it.
Yeah.
40 years ago, he made that comment about the Banana Republic and then delivered 3 years of reductions in real government spending.
Yeah.
We could try that again.
Well, and he made some very huge structural reforms.
Of course,
at the time.
The Keating government did some pretty amazing things. There's no doubt about that. Labor governments in other countries did the same.
Yeah. It's good.
And even John Howard said that some of his best work was as opposition leader because they all worked together. So,
it's good. Okay.
So unemployment rate's 4.5%, or even lower than that. It's you won't get a better opportunity to do some structural changes.
I think we did briefly say that inflation is likely to go up to 5%, which obviously means that the RBA could well increase rates another couple of times accordingly.
Oh, no doubt. Yeah, that will happen. That will happen.
Yeah.
Tough on home loan. Australia's the second most indebted households on earth, so that's going to hurt a lot of people.
It is. And let's just hope, as I call the Orange Oompa Loompa, doesn't wake up with another bright thought and cost me more money. Somewhere on the other side of the world. Oh my. Yeah, I was actually thinking that last night about how much money the Australian government is now spending because of this war in Iran. And I know there's issues.
Oh, they've benefited though, because they've increased their tax take through both inflation and increases in commodity prices.
Yeah.
So the government itself has actually benefited from the war in Iran. We haven't, the people haven't.
No.
But the government itself has been able to increase its revenue because of the increase in commodity prices.
So they're very lucky because they get to blame the war and they're benefiting from it as well. So,
I wish we could be doing the same thing. Okay, it's 1:59. We're going to finish at 2 because some of you got hard finishes too. Any final comments? No.
I'd say this: trust God. That's what I'm going to do.
Yeah.
Trust God.
Very
And I'm
good
serious.
advice.
I'm serious.
You know, and
No, totally.
The government's
remember, it's
not
God's
paying
money.
us. That's right.
We're
That's right.
stewarding God's money.
I think, and I stuck this in an email the other day. One of the things we're doing the National Day of Prayer this year is focusing on the sevenfold Spirit of God: Spirit of wisdom, knowledge, and understanding; Spirit of counsel and might; having a reverential fear of God, and being a person of quick understanding. That in this season, we need to know more than ever what's on God's heart and know His wisdom to be able to take, okay, yes, we've heard what the government's doing, but now what's God's strategy for us?
Amen.
And
Amen.
I think that's key. So if you want to get the novena to the Holy Spirit that I put together, just reach out to me as well. Well, thank you so much, guys. Alec, if people want to reach out to you at Marsh Ticknell, how do they contact you?
Email is probably best. So alexr@mtaccountants.com.au, or jump on our website, Marsh Ticknell Chartered Accountants.
Alex Cook, how do they contact you?
Best thing to do is go to our website, wealthwithpurpose.com.
Rod, do you want people contacting you?
Website as well. I'm happy for people to contact me. It's ignitelife.church.
ignitelife.church. And of course, you can contact us through businessblessings.com.au as well. Bless you guys. Thank you so much. I really appreciate you doing this today. I'm sure it's been very helpful for me. If anything, hopefully it's been helpful for you guys as well, and those that came on too.
Thanks, Wes.
Excellent.
Thank you. God
Bless
bless
you
you.
guys.
Thanks.
See
See
you.
you guys. Bye.
Bye. Hey everyone, Wesley here from Business Blessings. Thank you so much for taking the time to watch what the 2026 budget means for you and your business. We trust that you found that information very helpful. As we said at the beginning, please reach out to your specific professional to get the details that you need for your specific situation. I just thought I'd add a couple of quick things in to tell you some stuff that we're doing here at Business Blessings. Firstly, at the end of the recording, we talked about spirit of wisdom, knowledge, and understanding; spirit of counsel and might; having a reverential fear of God; and being a person of quick understanding. We talk about these as being the sevenfold Spirit of God. I've recently written a thing called the Novena to the Holy Spirit, which is a 15-day devotional about learning, actually about receiving the sevenfold Spirit of God. It's very key for anyone in business, because particularly Christians in business, because we're different than, not better than, and that's because of the empowerment of the Holy Spirit. And you'll find that these sevenfold spirits are very key for you, and also the developing the fruit of the Spirit in your life, which is what they're about. So reach out to us, or this will be put up on our website as an online course, which we're developing at the moment. One of the key things we've been working on is our Next Gen Business Program. So this is mainly aimed at homeschooling students, or those from 13 to 25 who are looking at starting a business. It's really about helping them not only to start a business, but if you're going to be employed in a business, to know what is the current business thinking and teaching. There's a whole wide range of stuff there. It is about building redemptive businesses and the keys that you need for that. We also talk about how to hear the voice of God in business, as well as some very practical business things. One of the things with that is each one actually gets access to the Proclaim Pros online platform, so they can actually build AI websites and all this kind of stuff, have the CRM systems, email and SMS marketing, everything they kind of need to build a online business or a offline business, but they need to have an online presence. But actually, this program is available for you as well. I don't know about you, but I was having a whole series of subscriptions to CRMs and databases and emailing and the web page and all that kind of stuff. But this platform all builds it in together. So we've now got that available for you, and there's lots of AI capability in that as well. Reach out to me or go to proclaim.pro to see that, and Brenton Drennan, who's working with us, can really help you to do that. Part of that is we're going to run a Christian Business Reboot, so a 2-day workshop here on the 5th and 6th of June. Going to talk about the prophetic clarity meets practical marketing execution. So hearing the voice of God in business, what's God saying to you about your business, but what's the practical things to grow and develop your business as well. One of the other things we have available to you is a strategy and discernment session. Like, one of my biggest giftings is I'm very good at the bigger picture, being strategic, and sit down. And sometimes you just need someone to sit down with and go through from a Christian perspective and have a look about what's going on in your business, what's God saying to you, what is God saying prophetically, and things as well. So if you want to book in for one of those sessions, go to our website, businessblessings.com.au. One of the other things that we've developed this year is a 7-day provision challenge, which is available on our website. It's just a 7-day devotional that you can work through. Again, like, I don't know about you, but I found myself just slipping over a bit into the worry, like everything that's going on economically. God, what's going on? And just being able to focus on God's provision in this season. And so this online community has been very helpful. It was very helpful for me in putting it together, and it's been very helpful for those who've done it as well. But any questions, please reach out to me through businessblessings.com.au. But once again, thank you so much for attending or listening to either on YouTube or on our podcast, our Connections podcast. If you haven't subscribed to that as yet, you can do that as well. Bless you guys abundantly.